If an investment sounds too good to be true, it usually is. At its peak, video game retailer GameStop's shares were up 1,600%, but now it's crashing back to earth. The saga saw highly organised small retail investors take on the power of giant hedge funds who had short-sold the company. So could the same battle happen here in Australia? Activist short seller Soren Andahl is the head of Blue Orca Capital. He's had plenty of success short-selling in the Aussie market, profiting as prices fall. It was Andahl's campaign that largely brought down sandalwood producer Quintus in 2017. A year later, Blue Sky Alternative Investments got the same treatment. He says there have been no winners from the GameStop situation, just a lot of losers.
What requires the proper functioning of the capital markets is the common belief in the integrity of the markets and the idea that there's a level playing field, and there's a level playing field not only for the pros but also for the flows. Like it's a level playing field for the little guy and the big guy, and I think that took a huge shot in the GameStop stock. There's this tendency to look at the GameStop situation and say this is something that's completely new in the markets, but it might be a confluence, almost like a perfect storm of factors of not only the retail participation, stimulus, other macroeconomic factors, but also, a highly retail followed name which had a massive short interest. And, as a short seller, I don't know if the lesson is not to short a stock at 140% short interest, but I'm not sure we needed GameStop to know that.
Blue Orca Capital spends hundreds of hours doing research and due diligence on the target before releasing a short-selling report to the market. One of Soren's biggest successes was triggering the collapse of Quintus. He compared the business to a Ponzi scheme and profited as the shares slumped. What value do short sellers play in the market?
Well, I think, short sellers have this unique place in the market as one of the lone dissenting opinions. There's so many forces allied in the market towards positive promotion of companies, everything from company management to investment banks that are promoting, to shareholders, to all of their service providers. They tend to join each other in a chorus of positive news, promotion, and promoting stocks. And as a short seller, you have this unique situation in which you're kind of a lone dissenting opinion. And we think of the markets as essentially a clash of ideas, a marketplace of ideas. And in order for that to properly function and to be efficient, you not only need the positives, but you also need people to ask critical questions that aren't afraid to, press management on their disclosures.
We should note that since the collapse, Quintus has been recapitalised and is now operating in private hands. But what about the chances of a GameStop-style situation being repeated here in Australia?
The Australian market, because of the superannuation, has always had a high retail participation to begin with. So, it kind of depends on what you think is the key driver and the key factor in the GameStop situation. Was it retail participation? Was it retail participation in a very unique set of circumstances around a particular stock? I mean, surely we've seen this in other markets before. It may not have been as salient and as noticeable as GameStop, but my guess is that we've seen it in maybe lower intensity and less salient examples in Australia already, and we could easily have it again.
Edward Boyd, Sky News.